Hi, if you've been following me for a while, you'll know I'm looking for small cap companies that could potentially be 100 baggers. And although I think there is still a place in the portfolio for the large caps, the big advantage I get as a small investor without institutional money is that I can look in the small cap universe that is neglected by those big guys. Therefore, there is more chance for inefficiencies. And a great place to look for these stocks is in the over-the-counter marketplace. And today I'm actually investigating the company that runs the over-the-counter marketplace called OTC Markets. Now in the description, I have a list of my favorite books. And I think reading these books are far better than following an investing course. You need multiple opinions, I think, and just like I hope you're watching multiple people on YouTube. Now, my links are in the description. If you buy these books from these links, you don't pay any extra, and I think I get like 50 cents or something, so that's pretty good. I'm a little bit of a cheapskate, so all those little 50 cents, they might add up to something. So a big thank you if you do use my links. Okay, so in today's video, I'm sharing my thoughts on the company OTCM as an investment. I'm putting this idea out there into the world so I can get some feedback. From my eyes, this might be the type of company that could go up 10, 50, maybe even 100x over a long period of time. And if I find one of these and invested in it, well, it would be a game changer. All right, so OTC Markets operates the largest list of over-the-counter stocks in the USA. The company makes money in three different ways. One, subscription fees paid by brokers to collect stock quotes and communicate with each other. Number two, the subscriptions that brokers and other customers pay for market compliance and company data. And the third way is subscriptions from the companies to get just set up on the OTC market. Essentially, they are a coordinator of tens of thousands of company listings. They compete with the NASDAQ and the New York Stock Exchange, but in the small cap world and the international listings world. So OTC Markets separates the companies on their list into three tiers. Tier 1 is called OTCQX. These are companies with high levels of transparency. It is similar to the New York Stock Exchange and the NASDAQ regarding transparency, they're just with less fees. This is a good hunting ground for stocks as it is easy to get company data. Then there's Tier 2, which is called the OTCQB. Now, these companies have less requirements than the Tier 1, and the fees to list here are cheaper. Often a lot of penny stocks here, as the stock's minimum price can be as low as even 1 cent. Then there's Tier 3, which is called OTC Pink Sheets. Now, this is a list of companies that don't provide enough transparency or documents to be in the higher tiers. Now, some companies don't want to fully disclose their operations for whatever reason. There is a lot of rubbish here, probably lots of scams too. Look, I avoid this tier completely, but some people like to go hunting in this dark world because there are simply not many people looking here. The plan for OTC Markets is to move companies from the pink sheets up into those higher categories where the fees are higher, but the reputation hopefully is also stronger. Now, regarding the industry-wide outlook, well, I think it is great considering companies I think will still exist in the future, and there will be a need to have them available to the public. See, public markets are important to the economy as it acts as like a voting machine on what companies succeed and fail. I can't imagine the small cap world changing a whole lot over the next decade either. Look, maybe blockchain technology changes the way we trade stocks, but look, I think there is going to be a lot of regulation necessary before that becomes some sort of reality. I also love subscription businesses. This creates strong, predictable cash flows, which is something I appreciate as a business owner. Future growth, in my opinion, is easy enough to see as well. So 1, moving companies up their tier list, Tier 3 to Tier 1, increases revenue. Number 2, getting more international listings as an opportunity for international companies to access the US local investor market. Number 3, US capitalism continues forward and new companies are created. See, the more companies there are, this equals more listings. And number 4, simply just increasing the subscription prices as needed. Look, raising the prices would be pretty easy to do as there aren't any other options for small cap companies. Now, when I was going through my checklist for this investment, I did ask myself these couple of extra questions. So first, I asked what famous super investors have invested in the company. Well, the answer is none, unfortunately. Then I looked at the market cap to make sure it's under $1 billion, and yes, the market cap is actually only about $500 million. And then the third thing I asked myself was, well, how big could the business potentially be? And there are no obvious restrictions on the size the market could be here. There are a lot of companies in the world, and subscription businesses can keep compounding with strong cash flows. So this could feasibly be $100 billion in market cap and beyond. The industry can handle that without really any issue. Now, $100 billion does sound pretty crazy, but even getting close to just the size of the New York Stock Exchange or the NASDAQ, it's totally possible in the next 10 to 15 years. And getting to that size is nearly 100x from here. So besides the fact that no other super investors have invested, well, maybe it's just too small for a lot of them, or look, maybe they think it's a bad investment. I don't really know. I'm happy with the industry they are in, and I'm going to give them a tick. Okay, now like I mentioned earlier, they compete mostly with other exchanges. So that's the NASDAQ, New York Stock Exchange, and major listing providers around the world. The big thing creating a moat around the business is the high barrier to entry due to all the regulations in the industry. It isn't easy to work with the SEC and show a track record of performance and reliability. See, having been around for a few decades now, the company has a strong market position. Now, my opinion is that it operates in a niche market as well. They serve small cap US equities and international companies that don't want to be hindered by all the reporting required and the high fees from the NASDAQ and the New York Stock Exchange. Look, often an international company lists on the OTC markets as a secondary listing, and the main listing is in the country of their operations. Like Heineken, for example, has their main listing in Amsterdam with a secondary listing on the OTCM. And with OTCM markets being a subscription model, customers continue to buy from them and the cash flow gets bigger and bigger each year. So looking at operating cash flow, it's grown consistently at about 12% per annum from $9 million to $26 million over the past decade. Revenue has grown consistently about 8% per annum, net income at about 15% per annum, and with gross margins being above 90%, well, this makes for a very attractive, proven business model. Looking at book value, and that has improved, but just not quite as well as the other metrics, mostly because the business doesn't have significant assets. They just need people and technology to run the business. So it's really asset light. And I'm okay with this. OTC market is a tech business and needs to be looked at differently than an asset-heavy business like Markel or Berkshire Hathaway or another large asset business. Okay, let's turn to some negatives now, and the business is not going to perform well in these following conditions. 1, if IPOs slow down. This would correlate with a depressed macroeconomic environment. Number 2, if trading volumes slow down, well, brokers are going to be affected. And if brokers are affected, well, that's their clients. So that's probably going to correlate with a depressed market. And the third negative is if the SEC makes new, tougher regulations. It's possible, and it's pretty uncertain to predict. So cyclical risk and any major rule changes will affect the business. That is what we have to weigh up in this investment case. But historically, the company has performed exceptionally well and reliably, even in the previous GFC. Okay, now this section is where things got interesting. Return on invested capital is a good measure in this case of a company that is going to compound their cash flow producing ways. The company doesn't have to do a lot of investing to make a lot more money. Maybe a new office once a decade and developing a new streamlined software product. They're relatively cheap things to do, different from opening another factory or something like that. So return on invested capital above 15% per annum is a good number, and we can use that as the compounding rate of the business per annum. But have a look here at the numbers for OTCM. How impressive is the past decade? This has been a compounding machine. Now regarding debt, well, the debt to equity ratio sits at about a 0.7, which is okay. The current ratio at about a 1.4, which is also manageable. Now with cash in the bank growing every year, the business has had to start paying special dividends as it doesn't need all that money. Considering they are compounding so well and they can still pay a dividend, that is a rare thing to see. Now the CEO, Cromwell Coulson, holds over 36% of the company. Look, he's a true owner-operator with his net wealth tied directly to the performance of the stock price. He has also been leading the company now for about 25 years, and he's turned the business into what it is today. Exactly what we want to see. Then we look at the free cash flow, and it has been consistently increasing at about 15% per annum. I'm probably going to use about 13% per annum as my forward growth rate, look, just to be a bit conservative, even though there is far bigger upside potential than that, considering that return on invested capital, those compounding rates are great. So I'm going to take that 13% as my growth rate that I'm predicting moving forward. Anywhere between 10 and 15% would be fine here. By the way, since it is a microcap company, we don't have analysts giving their opinions, and that's totally fine. We don't need the analysts anyway. Now, the lower the price we pay, the more upside potential we have, plus the less risk we take. So price is unbelievably important. I like minimizing my risk, so the best way to do that is to pay a price lower than the fair value. This table is called the price to growth to free cash flow table, and I've made this up myself. So the price to free cash flow is the relationship between the stock price and how much free cash flow the company is making. I then factor in growth rates to get some sort of target price to free cash flow number. This is a very rough way to value a company, but it's pretty good to get some sort of ballpark figure and to compare that then with my discounted cash flow method. Okay, so I've decided the growth rate is about that 13%. Therefore, the price to free cash flow should be somewhere between 10 and 25. Maybe about 15, 16, something like that. OTC Markets' current price to free cash flow is 19. So it's in our range, but maybe a little on the high side, not far away. That's pretty good news. Now I go take a look at my fair value calculator, which factors in more information. And if you want a copy of this, it's free and it's in the description. So I'm going to start by using that 13% growth rate that I'm estimating, and then a little less after that. Everything else here, in my opinion, is a fair representation of the company. It is a good company, and a 20 multiple is about where we are right now in 2021. It has been as high as 28 in the past. So a price around $34 maybe would give me an okay margin of safety. Now what I've done here is given myself a bigger return on investment goal, which means that's a bigger margin of safety. And a price now would be about $25. That would be amazing. Now I have no idea when you're watching this video, but currently for me, the stock price is about $40. So I would like to see it a little lower before making an initial investment. But it actually isn't too bad. If I use 15% as my growth rates, well, I could justify around $40. I'll have to think a little bit more about this one. Okay, so the negatives to this investment are, it's cyclical. Honestly, I don't think it's a big deal for such a cash flow producing subscription-based business. Costs are low, and even in a downturn, it shouldn't be a big problem. During the GFC, the company performed completely fine. Look, it had a slight dip, but they were never distressed. The next negative is the rules can change, and this is definitely my biggest concern. The SEC dictates a lot of what happens in the space, and OTC markets would have to adjust. It is outside of their control, which I just don't like. And the third negative I have is there's just no super investors that I follow invested in the company. This would just give me so much more confidence. Look, I'm not that smart, so having an experienced, successful investor already invested would make me have a lot more confidence in my analysis. But there are just so many positives. It's a subscription, low capital business, and I love recurring revenue businesses. They really have a monopoly in the small cap world. Their market cap is perfect with lots of room to grow. All metrics are improving. They've shown solid and reliable growth over decades. That ROIC is just super strong, and the CEO is heavily invested and incentivized. So do I think OTCM is a good company to invest in? Really good companies rarely trade at a discount. So this might be a case of investing in a great company at a fair price. I still want my margin of safety, so I'll have to think hard about this one. $34? Well, that would be really attractive. Now don't forget to subscribe so you don't miss my future videos. Hit me up in the comments if you have an opinion about OTC markets, as I would love some feedback. And don't forget about the books in the description below if you're trying to learn more. And this should go without saying, but obviously you will need to investigate a lot further if you want to invest yourself, but hopefully this has got you started. Thanks for staying all the way to the end of the video, and I'll see you next time.